There is a subtitle for today's title on this Friday episode of Pre-Market Prep. Jack Attack. And Triple D is back. Woo! He's looking good. He's sounding okay. He's feeling better, but, go easy on him. Go easy on him, folks. We got a great show for you here today. On this Friday, we're going to get you just a quick update on what happened with the U.S. and Iranian talks yesterday. And, of course, the big discussion of the day. Y'all already know what it's going to be. It's going to be the block discussion, what this means for the stock market, what this means for the world, what this means for the bond market. Netflix is out of the Warner Brothers Discovery deal, and the Netflix shareholders rejoice. Google getting a big deal with Meta. We'll touch on that. Earnings of note that we'll get to, Dell, Coreweave. We'll preview earnings next week. PPI, folks, at 8:30 a.m. At 8:35 a.m., Tony Pawlak, Real Life Trading. Get your tickers ready. And ratings a little bit later, folks. Let's get a kick in here on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Good morning, traders and investors. Let's go around the horn here real quick and see how markets are setting up ahead of this Friday. S&P trading down about 0.6%. Qs right there around 0.6%. Take a quick look at the IWM small cap names down just over 1%. Real quick look at crude oil trading up 2.5% this morning. Gold, GLD, trading flat. Let's call it flat. SLV, trading up 1.5% here. Take a real quick look at Bitcoin. And folks, we're going to add one more here into the rundown. Bitcoin trading down about 2%. The one we're going to add is the TLT. TLT trading up about 0.75% here this morning. Of course, our pre-market prep charts are brought to you by TradeStation. Born to trade, chart, analyze, customize, all in one platform. Thank you to TradeStation for sponsoring pre-markets prep charts. Let's bring in the man himself, Triple D Trader, to the stage, please. Dennis, good morning.
I'm here. I even put a hat on because I'm having a really bad hair day.
Folks,
this has
if you
been a
know
week,
Triple
man.
D is having a
I've
bad
been
hair
fighting
day.
here. Some people said I was hiding out because of the gold medal. Maybe that was true.
Part
Congratulations to all the Americans, by the way. No, actually, I ended up getting sick Sunday night. And Monday, I was just awful. Tuesday, Wednesday was the worst day. I couldn't even get out of bed. Didn't trade. Didn't do, like I was sitting in my bed with my phone, but I just was, headache was so bad. Throat was hurting so much. Yesterday, I felt a little bit better. I made a little surprise appearance in the STN room just last night. And then today, I felt like I'm good enough to be part of the show here. So I'd say I'm running like 50%. I'm still very weak. Just an awful flu bug / COVID. You know, it's all the same now. But just seems to keep, this is like the third time this winter that I've been hammered with it. Kids are both sick. So, you know, it's just going around. So it is what it is. I mean, when you're up here, buried in snow for 5 months of the year, you know, a lot of germs just come and fester up in your house and they don't leave. And I think you get these germs back and you get hit again. But I'm coming around.
Well, the chat is speaking for me here. Glad you're back, Triple D. We missed you. We missed you, buddy, but it's good to have you back. And, you know, nice that you come back on a Friday and you have a little weekend to add to the recovery.
It's going to help.
Ready
so
to
be better Monday for sure.
Ready and raring. Yeah, for sure.
I think so.
All right, let's get going here, folks. We want to just give you a real quick update on the U.S.-Iran talks yesterday. They ended yesterday without a deal. The last that we heard was from the Oman foreign minister saying that there was, quote, significant progress made, although right before the talks ended, we did hear a state Iranian TV saying that Tehran said it's determined to continue enriching uranium. So, I mean, we're still up. Yes, seems like we had progress. Yes, it seems like some of the moves, like oil, some of the moves in oil were a little muted over this week. We had some of the defense names moving lower, but it seems like the weekend war trade is certainly in play here. What do you think, Triple D?
I think so. I've been talking about the weekend war trade for a while. And why does it work well through the weekend? Why you just have an extra couple days for Trumpster to get on the old, tweeting or a truth and bandwagon there and saying they better shape up or ship out or whatever he's going to say about Iran. So
yeah,
I probably will put the war trade on tonight. War trade is Lockheed Martin, NOC, General Dynamics. You could go as far as RTX and you can go on the other ones, but really the LMT and the NOC, those are the two main ones. So like if you're thinking of war trade, also oil trading higher through the weekend, could be a possibility as well. It's trading higher tonight. So already today, I mean. So, those are trades to think about. Again, lots can happen between now and the close and now and the weekend, but I'll be looking tonight probably at the weekend war trade.
Cool. Are we ready for the block
this
trade?
Is going to be the XYZ is a huge discussion here.
This is, I mean, the implications are many implications massive. Here. Yeah. So, and like, so I want to just say, like, let's look at the chart here. Block reported their results last night. They weren't good. Nobody cares about the Block results, though. Everybody cares about these layoffs. We have the Jack Dorsey tweet that he sent out a message after they announced the job cuts. They're going to be cutting 40% of their workforce, and we'll read the Jack Dorsey tweet. But first thing I want to point out before we get to the Jack Dorsey message to his team at Block, think about the incentive that this price action Wall Street is creating for other corporations to do such job cuts. Shares of Block are up 20% here right now.
I mean, there's so many implications here. So cutting 40% of the workforce, there are arguments out there that, and I saw it all last night, everybody's talking about this, that XYZ is simply too much of a bloated company. And this is an excuse to cut their workforce. And that may be accurate. Sure. But to go and put your head in the sand and say, you don't think there's going to be other companies flattening, because we saw this word again in the tweet using flattening.
Sure.
I want to read, and if you go down, read like the third paragraph here, where it starts with, we're not making this decision. Highlight it and read it, because my eyes are bad and I'm getting old.
Yeah. So, no, you're not. No, you're not. I do.
I'm turning 50 this year, so I feel like I'm getting old.
I do want to read this paragraph too, because we're gonna. I think it's let's read most of it, because there's a lot of good stuff.
So important.
Really, it is. First off, if you're one of the people affected, you'll receive your salary for 20 weeks. Plus 1 week per year of tenure, equity vested through the end of May, 6 months of healthcare, your corporate devices, and $5,000 effectively in cash. I want you to know that before anything else, everyone will be notified today, whether you're being asked to leave, enter consultation, or asked to stay. We're not making this decision because we're in trouble. Our business is strong. Gross profit continues to grow. We continue to serve more and more customers, and profitability is improving. But something has changed. We're already seeing that the intelligence tools we are creating and using, paired with smaller and flatter teams, are enabling a new way of working, which fundamentally changes what it means to build and run a company. And that's accelerating rapidly.
Should I keep reading? Flattening word again. No, this is good. We can stop there, because we'll do some analysis of this, and then he gets on, obviously, talking about the employees. But this flattening word is here again. Mark Zuckerberg used it on his earnings report a month ago about talking about flattening. Now they're talking 40%. Right now, talking small percentages. We've had small Amazon layoffs. We've had small layoffs here. But if any of these major companies announce 40% layoffs, just imagine what the stock market. I mean, the stock market is literally selling off today. This is the XYZ sell-off. This is the concern. This is the reason we are down on the S&P. 40 handles right now.
Microsoft. Last night, we were like, what the heck is going on with Microsoft? It's because this, sorry to say, mediocre payments company that's a $30 billion market cap is cutting its workforce majorly using AI efficiencies.
Yeah. So two things, from that, and I want you to jump into some stuff that you've put together on this here too, Brentster, so we can sprinkle this in. But there is
sure.
an efficiency trade, which is good for stocks. But the layoffs, if they start coming in droves, is really bad for stocks. So then this is what
Yeah.
Citrini talked about in that note a week ago, where
True.
you get the layoffs. Go through your little presentation here. Brentster put this
Cool.
little presentation just quickly
Yeah.
talking about the numbers of the
Cool.
4,000. And they're not
And
huge, but just imagine them in the context of bigger companies.
Yep, and I'm not trying to get, exact here. This is just to give an idea. So we have 4,000 employees being cut. 22, let's say, average 2 years per 10-year for employees. So let's say 22 weeks of pay plus 6 months of healthcare plus the cash. So
This is from
average
Jack.
salary.
So this is what he said they're going to
This
get.
is all from Jack. Yes.
Yeah.
I'm guessing on some of the average salaries here, but let's say average salary at XYZ is 150,000 times, half of that salary for the year. That's 63 grand per employee for the salary that Block is willing to pay. Plus, let's say 500 in healthcare costs for 6 months. That's 3 grand right there. Plus 5 grand in cash. This is all mostly what Jack's saying. So let's say on average, Block is going to be paying about 70 grand per employee times 4,000 employees. They're going to incur a $300 million, conservatively estimated, one-time expense for these layoffs. Stay with me here.
Yeah.
There's also some added non-monetary expenses here. This is going to be a major hit to motivation, morale for the culture, which Jack did mention. Also actually implementing the layoffs. So effectively, let's consider Block is willing to do $500 million to execute this plan, right? All right. So in order to accept an expense like that, there must be some kind of factor over that they're going to be doing from these AI efficiencies. Is it 3 times? Is it 4 times? Is it 10 times? Conservatively, let's say Block thinks that they're going to be saving at least $1 billion a year, right?
Yeah.
So could Block, this is a question I want to ask, could Block management already have a good understanding of the full bounds of AI efficiencies for its businesses? They've probably been working on this a little while, so they might have a good understanding, but I think the full bounds probably are not fully understood. So this is the question that people around the web are asking: is this all for AI efficiencies, or is this an excuse to cut costs? And that's kind of what you were saying, Triple D.
Yeah.
Jack responded to that thought, and he
Yes.
posted this on his X account with some of these stats.
The bloated,
here.
the
bloatedness.
This is the
yes.
bloated argument that everybody in Jay Rice is mentioning right now. Everybody's saying XYZ was bloated. Stop scare tactics. XYZ was bloated. And this is just an excuse to what Elon did with Twitter, just to bring it down. There is maybe some truth to this, but Jack has responded to this too.
And it's a pretty fair response here. He's taking other payment companies, showing how they added to their workforce, and he's comparing that to the important part here, gross profit per employee. And Jack is trying to make the case with this that despite maybe growing its workforce too much during COVID, he admitted to that. He's still highlighting that the gross profit per employee last year was higher than any other payment company out there, almost $1,000 per employee. All right, let's keep this going here. Now let's expand this out into other parts of the economy here.
If other companies,
yeah, thank you. If Block's market cap is $30 billion, there are around 500 companies publicly traded within the U.S. with a market cap at or over $30 billion. Let's say if each company is saving at least $1 billion, and let's consider some kind of scaling as these companies get bigger, if Microsoft does something like this, they're going to be saving a hell of a lot more than $1 billion.
Trillions of dollars.
We're easily talking trillion dollars in savings.
Yeah.
Exactly.
AI
exactly. Yes, exactly. So now my question is, and we can take this in a bunch of different directions here, but where is if yes, they're saving a lot of money, but also if 20 to 30% of a corporation's expenses are for payrolls, for paying people's salaries, where is that income going?
Well, this is the problem. So you have two main things here. Is one, if all these companies are going to get more efficient, a la XYZ this morning trading higher, the stock prices are going to re-rate higher because they're going to make more money. But that's also not seeing the forest through the trees, because that's the short run. So it's short-term gain, for long-term pain, because these jobs, if we get significant job layoffs, and let's just talk about Amazon for a second, who has only laid off 16,000 people so far. Amazon's going to say, oh, they've already done their layoffs. This was last year. This is before we started to get these AI efficiencies. Amazon has 1.58 million jobs. They have 350,000 corporate jobs. Do you think for a second that AI isn't going to make some of these employees more efficient? They're obviously going to make a lot of things more efficient. There is so many jobs at risk here. So we can just say, oh, this is just a block problem. But I believe truly with my soul that this is sticking your head down in the sand and hoping it goes away. It is not going away, folks. Government regulation maybe is going to help, maybe slow it down, but it's not going away. There will be job losses. Now, can AI, Kramer has argued, AI is going to create more jobs than is taken away. Nobody knows where we're going, and maybe that's going to be true. But those jobs are going to be different. It's going to be different jobs. It's going to be about managing AI systems. So right now, today's sell-off, the market is telling you today's sell-off is this is the XYZ fear that all of a sudden, the software stocks had a tremendous rebound in the last few days.
Yeah.
But today, this morning, are giving half of it back. This is the XYZ sell-off. So there's so many things to think about here. But, the big picture here is, yes, companies are going to make more money. So maybe we want to just buy all these stocks because it's going to make more money off efficiencies. But at the end, if, and this is a big if you lose 10% or 20% of your workforce overall due to AI efficiencies here, that's a lot of money not buying products. And when we're talking white collar jobs, and that's what AI is going after right now, until physical AI gets here, your plumber is safe. Once physical AI comes, that's a different story, but that's a few years out, I would think. But AI is here right now. There is definitely efficiencies. I can see it in my own stock trading, the stuff I'm using, the stuff I'm doing, like I'm using Gemini continuously.
Yeah.
I mean, I all of a sudden don't need to use other software. Maybe I don't need to use other things. There's just so many repercussions here to think about. But to just say this isn't going to change anything is just not paying attention to what is actually going on. So there are going to be winners and losers. But if we get this overall economy where it's more efficient, stock prices do rise, but then that Citrini effect, that we were talking about, the negative feedback loop, is now there's less people spending less. So what you lose, first of all, is probably discretionary spending. When people are hurting for their bills, think about the 4,000 people just lost their jobs. They're not going out and buying Rivians. They're not going out and buying, like going on fancy trips and booking fancy trips. Maybe they had already booked. Maybe they're going to go on at one time, but they're worried about we better save for a rainy day. This is going to cause more savings from not just the people losing their jobs, but people who fear losing their jobs. So it's that fear that can drive, spending as well. Because if you think your job's not safe, you're going to be holding back on discretionary spending. That's an issue for a lot of companies. A lot of these stocks have not been hit yet. Look at RCL trading up near the highs. Oh, we're fine. We're AI proof. Are you? If it starts to come to job losses or fear of job losses, there's going to be less people booking trips. So, you can think about. Yeah. So I had my official acronym before the AI started, and so much has changed in 2 months. We gave it first of the year, January 2nd. It was Burr because it was cold up here in the winter. And it was Baidu, which I still like Baidu. I own it. My second one was Rivian. R was a Rivian in there. I sold my Rivian. I did that in the STN room on the Rivian earnings bounce because I'm like, things have changed. I don't think people are going to be spending on luxury items like they have in the past if they're worried about their jobs. The other one was Rocket. I've sold that too. I do think interest rates could go down lower, so I don't hate it, but at the same time, I'm just not as comfortable as I was with it. And then the last one was regional banks. I'm not sure I like that anymore either. So officially, I'm changing my acronym today. Burr is gone. I've only got Baidu left. And I'm just it's just a new world here right now. And I'm changing my acronym to one stock. It's going to be TILT. TLT. Because I think this economy is going to go on tilt. I think when we're looking at this a year from now, there's a lot more layoffs, a lot more flattening of the yield curve, and there's a lot more investors playing defense, but not just that. What we have to consider is the efficiencies of everything too. Yeah. And if there's less money going around, and if you don't have to pay certain, you can have AI do certain things for you, you're spending less. prices can actually go down. Deflation could actually come into the picture for the first time. I've always said, I said this a couple weeks ago, but I've always said deflation is, never going to happen. I'm not of that camp anymore. Everything has changed here. I do actually think we have the path built for a deflationary environment where prices can actually come down on some stuff. And that's because, it's all driven by spending. Spending starts to come down more. People got to, the companies got to start lowering their prices on stuff. And if they're more efficient, they can lower their prices. So if companies are more efficient at what they're doing, they will be able to because their margins will be higher. And in order to, get people to spend, they're going to have to bring the prices down. So AI efficiency could actually lead to a lot of deflation. If it does, I know this is a sick rant, but if it does, what's going to benefit from deflation? Bonds. Because
100%.
$1 today is worth more than $1 tomorrow in a deflationary environment. We have never seen that in North America. Not in like current times anyways, where $1 today is going to be worth more than $1 tomorrow. That is possible. The bond market's been in a 3-year bear market. The TLT, bring it up here, Breadster, has just been an absolute disaster. So I bought TLT last week in the STN room. I think there's a path here where the TLT could be well above $100 within, 3 to 4 months. And I think there's a path where it could be $110 to $120 by the end of the year. That's a huge return. I think it's a lower risk play right now to bet on AI because I don't know where AI is taking the efficiency stuff. But what you can see is bond markets have been just hammered. 3-year, we were TLT 2020, $170. If we go to a deflationary environment, is it absurd to think that we could get interest rates back to where they were in 2020? I don't think so. I think there's a lot to think about. So I actually have been moving stocks out and moving into government bonds. Staying away from corporates, going with government bonds.
Sure.
And a 4.3% yield on the TLT is not sexy, but heck, if it goes up 20% on top of a 4.28% yield, that's a pretty darn good return. I think TLT may be the play.
All right, Triple D, tell me explain if you can, where does the interest rate path from the Fed fit into all of this? We were expecting a rate cut probably at the earliest by June, but maybe more likely now by July. How does us having our sights on that affect what you're saying and this potential path for like a TLT? We have a couple other.
Well,
we have a couple other.
What do we have?
Say again.
Ducks are all in a row here.
Yeah.
So, what did you say? We had an alert?
No. Sorry, I was gonna say, and we do have a couple other. You didn't mention them yet, but we do have a couple other, like bond-related tickers that we wanted to take a look at.
Yeah, we can look at those too. It doesn't just have to be the TLT. There's a lot of different ways to play government bonds. So we'll give you a few of those tickers here right now.
Yeah.
And then I'll go into. I don't remember what I was.
Cool. Yeah. I wanted to mention these.
Like
first,
TLT is obviously what everybody talks about. There's other ones like EDV, which is Vanguard Extended Duration Treasury. Some of these aren't that liquid, so you got to be careful. The liquidity. Don't just pay huge spreads. There's UTHY, which specifically designed to track the bellwether 30-year Treasury bond. UTHY is a little higher yield. That's longer too. Again, liquidity on these aren't that great, so you got to work the trades a little bit, but it's there. Like if you want to work it a bit, it's probably there. So there's different ways. If you just want liquidity, though, TLT is probably the easiest, maybe way because it's very liquid. So it's very wide. GOVT is another one. There's lots of different ways to play this.
Okay, sorry to interrupt you there. I wanted to make sure we mentioned those other tickers, getting some good trading ideas in here. Okay, so back to the Fed and interest rate path here, and I do want to just give a little quick heads up while I got a sec. We do get the PPI at 8:30 in about 5 or 6 minute focus.
We'll wrap this discussion in the next minute or two.
Cool.
So with your question to how does the new Fed chair fit into this? Well, all the ducks are in a row on this trade on TLT. I was already bullish TLT before the AI efficiency stuff because I felt that the Fed chair was going to be more of a dove. He's not as dovish as we thought he was going to be. If he would have went with one of the Kevins, like Kevin, it may have been a little bit different story here. Like if we went with Hassett or obviously, but anyways, yeah. But in any regard, he's been appointed by Trump. Trump wants lower rates. I think there's going to be a lot of excuses to lower rates. If inflation stays in check, that's an excuse. If we actually see prices start to come in, like actually start to hit deflation, they will lower rates rapidly. So I think lower rates are in the cards for the not immediate future, but 3 to 4 months out. So the question is, when do you put this trade on? Because if we're all going to get these AI efficiency pops like XYZ, well, then, why not be invested in stocks? Because these companies are going to be more efficient. So there could be an efficiency pop, which takes the stock market back to all-time highs. But longer term, that vicious cycle of losing the jobs probably, is going to impact the economy and maybe suffer corporate profits in that way. So even though they have higher margins, they're going to have less sales. So I don't know when the market prices that in, but if they're all going to re-rate like XYZ, you probably still want to be long stocks right now. So maybe this government trade is the second half. I'm going to play it safe though and start lightening up some stuff right now that I think is, like my Rivian. I sold that. Move Rivian, sell Rivian, move that money to TLT. I have, been buying some other stocks too. I recently bought Apple because I'm talking energy, hardware, and necessities, essentials, whatever you want to call it. Those are the three things I'm heavily investing in. Like that's where I'm moving. When I sell a stock, I'm moving into that. People say, well, why don't you just sell it all, just move it all over one day? Well, it's about reallocation, picking your spots. With Rivian, it gave me a 20% earnings pop. What a fantastic opportunity to get out because the company was fine. The earnings were fine. I'm not worried about the earnings right now. I'm worried about where it's going. So, that's where, you got to time your spots and you use rips to lighten up the positions you're worried about, and you use dips to buy the positions that you want to be in.
All right. I want to give a quick preview here for the PPI that we are going to be getting in about 3 minutes or so. PPI for the month of January. We're looking for a core reading. Y'all know that I like to look at the core reading. It excludes the volatile food and energy prices. We're looking for a month-over-month increase, 0.3%. We're looking for a year-over-year increase of about 3%. We got a few minutes here. I just wanted to circle back real quick on one thing, Triple D. We had an expectation that Fed could take the rates down to like maybe 2.5%. But if prices are coming down at the same time, I mean, it's tough to say that there's not a chance that our rates kind of maybe easily go under like 1%. Reminder that during COVID, and I'm not saying this to make a comparison to COVID, just a little historical context. When we were around COVID, our rates were like 0 to 0.25%.
I think there's a path here over the next year to 2 years where interest rates could get back to where they were like pre-COVID. And that, my friends, is awesome for the bond market. We have a setup for one of the best bull markets in the bond market of all time. We have the ducks in a row for that. And if you're not looking at those ducks, if you're just going to continue to play the same way you've been playing the whole time, and we buy stocks and they go up 25-30% a year, that may be true short term. I do think we could get the S&P to all-time highs off the efficiency trade. But I think longer term here, I think there's something else happening. I think jobs are going to be a major issue. And I think bonds, government bonds that is, may be the safest way and maybe the best way to play AI at this moment in time. That's a wrap of the conversation.
Awesome. Thank you. Great conversation. Glad we were able to have it. Glad you were around, Triple D, so I could have it with somebody today. This is excellent.
And people are asking about gold and silver in this context, so we should just talk about this.
Okay.
I mean, if you go into a deflationary environment, it's not good for gold and silver, folks. Sorry. You know what is great in a deflationary environment because we never have it? It's cash. Cash is the best in a deflationary environment because your dollar today is worth more than your dollar tomorrow. So I'm not I don't know if I'm right. Nobody knows anything. Like we always say, we never know anything. It could be dead wrong. It could all be wrong. It could all be like Denny is just wrong. Could be. But there is a logical argument to what I'm saying here. And the bond market sets up really well. So I'm betting on government bonds. That's what I'm betting on. Long, getting long in the duration. Go out long, as long as you can, 30-year, whatever you want to do. Maybe you just want to go buy the 30-year. You have to do ETFs. Go figure it out. That's where I'm going. So, okay. Anyways, we're going to get an inflation point here right now, PPI. Let's see what happens.
Cool. While I got a sec here, I want to say thanks to our wonderful sponsor for PreMarket Prep, Hive Digital Technologies. There's a QR code in the bottom right corner of your screen, folks. You can scan that to get over HiveDigitalTechnologies.com. Thanks again to Hive. Had a great conversation with Frank. It's Frank's birthday today, Triple D. Give him a shout out.
Frank, happy birthday, buddy. Feeling it.
About 15 seconds here until we're going to get our PPI reading. Give you the numbers here one more time. We're looking for a 0.3% increase on a month-over-month basis. We are looking for a 3% year-over-year increase. Here comes the numbers, folks. The numbers are hot Core PPI up 0.8%. Economists were looking for a 0.3%, almost. It is a 0.5%
Not gonna help.
over the number, over the expectation here, folks. Our year-over-year figure up pretty much in line with that monthly figure. Year-over-year core PPI up 3.6% versus a 3% economist estimate. Pull up my chart here in SPY, and we'll see what's going on in the market. And we are pull up a 1-minute chart also. Moving a little lower here, but was that not a crazy move? That wasn't a crazy move lower, right?
No, not really, to be honest with you. It didn't really move much. I think
Yeah.
it's because PPI and people just don't care as much, but it was hot. So I
People
would have
do
thought
care
more.
more.
We were already down so heavy.
Yeah.
Or to like come in here.
Yeah, people do care about the CPI more. PPI a little less, but we are leaking here a little bit further. Very hot number. Just want to read it here one more time. 0.8% core PPI month over month reading versus a 0.3% increase. Triple D, let's get to one of our big corporate news items for the day. Netflix is officially out of the Warner Brothers deal. Woohoo! Stock's trading up 8% this morning.
Yeah. Nice pop
They love
last
it.
night on this. They announced, that this is just not going to work for them. So Paramount wins. Netflix happily walks away. The rally in Netflix the last couple of days is in rumors that Netflix was obviously going to let Paramount take their bid. Looking more at it, the stock was popping on the potential relief that they may not actually buy the company. So now you come in and you're like, okay, stock just went from 75 to 95 last night on this. It did hit $95 last night on this. I mean, so you could say, wow, let's buy Netflix now because it's going straight back up. Well, we already just rallied 25% in 4 days, and this is basically off of this information. So I would say I'm not so sure that there's more rally in store here. Could have hit $100? Maybe. There's technical resistance up there at 95, though. I don't think it's great for WBD. I went short WBD last night. It tanked $1, and I covered it for the quick money.
Nice. Yeah.
It's back up here again. The reason I'd be nervous more on on WBD is because, let's be honest, PSKY is not as strong of a company as Netflix. So
I want to, yeah, sure. I want to highlight what Alicia Reese had to say a couple days ago. She said, this is a deal that Netflix wants to make. This is a deal that Paramount Skydance needs. She was very convicted in this. Triple D, one thing that before we get to Tony's waiting in the background.
Sure.
Before we get to Tony, one thing I want to get your take on, and maybe kind of convince you a little bit. What about Netflix as more of a defensive play? What about Netflix as that tariff-proof name back in the middle of 2025? This is what I was talking about yesterday on pre-market prep. And yesterday, that move in Netflix kind of felt like there was some people going like, oh, yeah, Netflix was a bit more defensive back in like May, June of last year.
It has characteristics of that because it's a low-cost fun item, like it's like if you spend $10 a month or $6 a month if you want to do with ads. I mean, there's just it's not like people, if I cut my Netflix, all of a sudden, I'm going to save a lot of money to pay my bills.
Right.
It's not like,
right,
I'm not going to buy a Rivian, because I'm worried my jobs, but I'm going to cut my Netflix? Probably not. So there is definitely an argument to what you're saying, the defensive posture of the stock. So I could get on board with that. And the efficiencies could be there. AI maybe creates more efficiencies for Netflix. So obviously, maybe there's, some use of AI and even making, new productions, to spend millions of dollars producing stuff. They might be able to get on board with that.
Yeah.
So I kind of like it.
Yeah.
I would wait for a pullback now, though.
Exactly.
It's just too much too fast.
Yep.
This is the Warner Brothers relief pop here.
Yep.
I think we're in a rough enough market environment here that I'm not buying rips. So that's where I'm at on Netflix. I wouldn't necessarily short this and say it can't continue to go higher. I kind of like the stock, but I would wait for a dip. Let's go to Tony. I'm going to take a break.
All right,
I'm going to let you run with it. Just give my voice a break.
Yeah,
Tony,
for sure.
hi. I want to say hi to Tony. But
he's waving. All right, here we go.
Hey, what's up, guys?
Good morning. Owner and a coach over at Real Life Trading. How's your day? How's your week going?
It's much better now with this gap up on Netflix you guys were just talking about. Yeah, we bought the dip on Netflix, I would say like probably a week and a half ago. I
Okay.
think around 78 or so. We bought it with options. So that way I can limit my risk if it were to continue to drop, which it did drop a little bit more. But yeah, we're going to get paid pretty good on this gap. So
Nice.
it's a great
Congrats.
week now. Yeah.
Woo! Great way to end the week on a Friday. Happy Friday. You want to pull up your charts, Tony?
Yeah. Let's do it.
If you don't mind.
I'll let's see here if I can get.
The chat loves your charts for whatever reason. You give Joel chart envy. I just want to say that.
Oh man, I love it. Here, let me I'm gonna get this thing. There we go. I'm actually gonna do a different share so you guys can see my pen. I was
Okay,
working on this. I came prepared.
Oh, thank you.
So there we go. Sorry, the thing was not wanting
No,
to
you're good. You're good.
pull up. All right. Now we can draw all over this thing.
Oh, baby.
And
Oh, little smiley.
let's go. All right. So I'm always drawing on stuff and no one can see anything. So with Netflix, this is something that caught my eye. Will this continue to run? No idea. I don't have a crystal ball. I didn't spend the money on that crystal ball. So I should have. When Josh offered it, I should have bought it, but I didn't. So I don't know what it is. But this is something that I think a few people are missing. If you go to a monthly chart on this thing on Netflix, we had a fantastic key level resistance back here that had never been retested on a monthly until just now. Wow. This was the reason why we were after this. The 50 EMA, this green line right here, that was the low of the last time we had a retest on a monthly. We squeezed all the bears out, and this area, this fair value gap, this massive buying zone had not been retested yet. My biggest concern with buying down here was the fact that we were going to get below and close below on a monthly below all these wicks. Well, with this gap up, that's no longer the case. So now we have a trapped area where bears are now, stuck. We have a trapped area where a whole bunch of bulls said, I do not want it to get below this area right here.
Sure. Yeah.
And then it dipped below it, not for like a day or two. I mean, for a solid month, it was crushing these strong buying levels, but we were looking at this level over here. Mm-hmm. So in, how I trade with my price action, this is a big secret on what I do. I am looking for higher highs and higher lows, right? It's not that. But what I'm looking at is this key level. Whenever a stock runs up and then starts to pull back, this area becomes very, very important to me. What it does at this area tells me a lot on strength and on sentiment. So this was that area right here, right? And the markets are falling apart. We'll get to that here in a sec. This was that area right here. When we made it back to that area, we took off. That is a sign of strength, and that opens the door for me to buy the dip. So whenever we retest those important key levels, I want to be a buyer in those situations, especially on a monthly chart. This has a very high probability. I would say 60 to 70% chance of forming a new higher low whenever price action breaks out of that key level like that. Mm-hmm. So on a monthly chart, I saw this months and months ago when Netflix was pulling back into this buying area. I was like, I love this. Love this. And you can see my alerts all over this chart. I was going to add more. It didn't quite make it down to my final ad right off of the 50 like I was going to. So I didn't get in more on that. But I'm in enough. And the nice thing is it's with options. So it doesn't take up a lot of my buying power. We bought these 500 days out, though. So we did some leaps. And that gives us a lot of flexibility. I can actually exercise these and buy the shares if I want to, if this thing takes off. I don't know what it's going to do from here, by the way. We'll go over that in a sec. But I can sell against these and do a whole bunch of poor man's covered calls. What is going on this? Sorry. I can do a lot of different options to be able to reduce my overall exposure, but I have all the leverage to the upside and I have a fixed cost to the downside because I can only lose what I spent on those options. It's a much safer play than shares, in my opinion. So whenever I'm doing these kind of grabbing the bottom dips, I'm not going to do it with shares because if this thing keeps tumbling, I'm losing dollar for dollar on shares. If I buy it with options, I'm capped out. Right? I can only lose. If you buy, $500 worth of options or $1,000 or $100,000 worth of options, you can only lose that number. That's the worst thing. If Netflix went to zero, I'm still only going to lose whatever I bought on it. And it helps manage risk so much easier and takes the pressure off of buying the dip, because I don't have to stress about, man, what if Netflix gaps down 5% tomorrow?
Yeah.
I have my risk set, but I get all the leverage to the upside. And people are like, why don't you trade like Forex and stuff? I'm like, because options are where it's at.
Mhm.
Forex, you have leverage on both ends.
Yeah.
You get the leverage on when it doesn't work. You get the leverage when it does. Options, I just get the leverage when it works. And I have my max loss fixed in on buying options. Now, selling options, a little bit different game.
Yeah.
Buying options, I don't have to worry about the leverage against me. I just get it in my direction. So this is the game plan of what I did on Netflix. We planned on this for months, by the way. This isn't something I just walked up and was like, I'll buy this. We were looking at Netflix, I mean, last year. It was like fall of last year, I'm pretty sure, is when we're like, I want this, and mainly because of the setup here that we had on a monthly chart. So that was the main caveat and main reason for us to be looking at getting this. And yes, it's gapping up and it's working great, but a week ago it wasn't looking great, right?
Yeah.
So it's not like, well, he's so smart. It's like you just hold through it, you accept the loss, and we see which way it goes. I had a game plan if this didn't bounce, and I had a game plan if it did, and I just wait and see which one.
Tony, I feel like what you just said there is like your bread and butter. Like, I've been watching this for months. You've expressed on PreMarket before, like some of your setups are like stuff you're looking at like for a couple years even. So
Yeah.
man, that's got to be so exciting. Just like waiting for something that you've been watching for like a year, and then you're like, yeah, I got it.
It's awesome. And your ability to not take a trade, your ability to wait is what's going to open the door to profit.
Yeah. Oh yeah.
The greatest trades that I've had over the decade of trading that I've done as a full-time trader have all come from times that I've planned for a trade for at least 6 months. So like, cool. I go back over time, and it's always the ones that I'm like, man, if we get here. So like right now on SPY.
Yep.
I don't know if SPY ever gets here, but if it does, if we get to 615, I am buying. It's the same concept that Netflix had. This was our important key level. We smoked it when we went through it, which means this is a heavy buy demand. And so if we ever make it back there, this zone is going to be the buying zone. Doesn't mean it has to buy right at 610. No, but I'm going to be watching sentiment like crazy, and I'm going to be loading it up. It's the same way. It's the same way that we bought down here. You notice the same theme? Like, go to a monthly chart, guys. Like, this is such a, is a guarantee. No, nothing's a guarantee, but you're giving yourself a 60 to 70% chance of it doing something and doing it quickly. And you're going to know it's going to work relatively quickly.
Right.
I would say, I always give about a month and a half. That's what we were at with Netflix, and now it's working, which now I didn't think Netflix was going to work. But this, it's the same setup. So in the future, my friends, don't look at what the market's doing now. Look at what it's about to do. Every single time the markets do this, we get a pullback. It's just when. Am I saying a pullback's happening today? Maybe. But is it probably going to happen in the next 7 months? Most likely, because every single time the monthly looks like this, we get a pullback. It's not a shocker. We're starting to see rotation into defensives. The markets are starting to get stuck at levels. We can keep going higher, but the signs are there that eventually we probably will get a pullback, and the first place we should buy is here. And so that's what I'm looking at. That's the setup that I use over and over again when it comes to buying these dips. And I do it in a safe way by doing it with options. I protect myself. I don't act like, hey, this is for sure. Nothing is a guarantee, my friends. Focus on your risk, not on the reward. How can I mitigate my risk instead of how much money I'm going to make?
I like this comment that Smoke Tuna is making. Tony, most people want quick money. They don't want to sit and look at stocks for 6 months. You know what? That's what makes Tony stand out. You want to do a couple tickers here, Tony?
Yeah, let's do a couple tickers.
All right,
it's actually crazy. Real quick on that. Look at the amount of people making money in the markets, and look at the amount of people that have the mindset of calm, patient. I'm going to let it come to me. The amount of desperation in the markets of, oh my gosh, the markets are open. I've got to make money. I've got to make money. I've got to make money. And everyone loses, right? You might not want to go with the crowd that's losing. Like, you can choose the team that you want to be on. You can choose the winning team or you can choose the losing team.
Very well
Everyone
said.
chooses the losing team on their own end, and then they blame the markets. It's like, choose the winning team. What are the winners doing? Now, guys, does that mean that I don't make money until I wait 9 months? No. This is just one of my strategies, right? I make money every single week in other ways. I do different things to make money every day. But this one method right here requires me to wait a long time for me to get paid and for me to find the right setups, but they're extremely consistent. And so that's the key, is if I try to hit home runs, like this is my home run setup. These are the trades that I'm doubling and tripling my account in 1 year on, but they don't come every 3 hours, right? They come like once or twice a year at the most. And that's the difference, is someone hits a big winner. They buy NVIDIA and NVIDIA rips 200% and like, oh my gosh, I'm going to do that again next week. Like, no, that was a once in a 10-year move. You just caught it, right? Changing your mindset and having the right expectations is going to set you up for success, and having the wrong expectations and chasing the wrong thing is what's going to bury you in your trading. You've got to understand that the big life-changing trades are going to come. You need to understand what to look for, and then you need to be patient enough to let them come to you instead of trying to make a life-changing trade happen every single week, and you end up just blowing up your trading accounts, because they're not going to come, right, every week. They're going to come once or twice a year at the most, and you've got to be willing to wait for it. You've got to plan for it. You've got to be willing and ready to do something that most people won't do, because buying this emotionally, most people won't do. They're like, I'll wait for it to bounce. Now everyone's buying Netflix. But guess what happens to those options? They're already up 200 or 300% from when I bought them down here, right? Like, that's the difference. Like, I'm getting them on pennies on the dollar. And if I'm wrong, I have a game plan. And when I'm right, I'm already so profitable by the time people even think about getting in. I'm now selling it to everybody that's paying a huge premium to get into it when I bought it on discount, right? That's the game with options. Shares, not as big of a deal, right? You can kind of get in. It's not going to hurt you. Options, literally, you're paying 2 to 3 times the amount that I just paid 2 weeks ago. You've got to understand when to do that. Sorry, go ahead.
Crazy words of wisdom, Tony. This is some of my favorite stuff to learn about. So I love the sentiment that you share when you come on Pre-Market Prep and over at RLT. Let's do a couple tickers here real quick. Let's do IBM.
IBM. All right, let's dive into this. So, man, where do we start on this one? It's falling off a cliff right now. The bulls, in my opinion, are starting to give me signs that this massive run is coming to a close, and we're probably getting ready for a little bit more substantial pullback. Again, look at a monthly chart, since it was already in front of our face. We're no longer making higher lows, and that's a big deal. Bull markets, higher highs, higher lows. We made a new higher high, but we've already failed the higher low. We should have never gotten back down here. This is a big deal. When markets run, at some point the game is over with and they pull back, right? And then the game continues. So what are you looking at? What signs are telling us that the game might be over with? Because this thing's been running bullish nonstop since 2023. And everyone just thinks this continues. The game continues until it doesn't, and you've got to be aware of it. It's the same thing back here. This is telling me that we're having some issues. And it's not like it played out in 3 hours. It took another 6 months. But if you were prepared, you would have been able to exit through here before you gave up all your profits.
Sure. Yeah.
Right. So this is starting to tell me that we've got some serious issues. The daily close yesterday, or not yesterday, I'm sorry. The daily close at the start of the week, really rough. This was all kind of that retesting. I would expect bears anywhere in this zone to continue to push this thing back over. If at any point we start getting back up above 300, I would say bulls are back in control. Bears didn't do their job, and we probably do squeeze a lot higher. So whenever the bears commit and they don't follow through, that it opens the door for some parabolic moves and it can really keep this party going. It goes pretty strong from there. We've had this happen before. Bears needed to hold here. They didn't, and it squeezes out higher. Will that happen again? No idea. But from the sentiment that I'm seeing right now, I expect, again, the probability is chop, and then further drops coming through on sorry if I could talk, IBM.
You can
So
talk. Yeah.
that's what I'm looking at right now. It's just
Cool.
extended. So some resting patterns probably make sense first.
Dory was asking about that one. Thanks, Dory, for the ticker on IBM. We got a couple more here for you, Tony. Helen was asking about Coreweave, CRWV.
All right. Oh, it's a rough gap today. There's a big gap down on the markets right now, too. So, man, the bulls were so close to taking this. And this is why this gap is so rough. We're on a daily time frame right now. The bears have really defended this zone, right? Again, they move stronger down. Bears should be pushing us lower. So whenever the bears start to give up their defenses right here on this nice gap up the other day, that is getting a lot of bears out of their position because they're scared of a big run. And a lot of bulls are looking at this going, hey, here comes the squeeze. So a lot of bulls are getting in over the last few days, especially yesterday. We're getting some volume up, right? Nice lower wick coming through. And now this gap is now bringing the FOMO in for the bears that just exited up here, that got stopped out. And it's also triggering all the bulls that got in the last few days to go, oh my gosh, they're going to start to exit. This would be a great day trade today. Most likely going to see some selling. And I would be looking at sentiment back in at 74, 75 to see if the bulls will try it again. This is a great gap. Gaps are great whenever they trap people right away. The bulls just committed and immediately are wrong, and they're wrong big. So I'm not saying it's going to 75 today, but if this were to retest a little bit back up to 92, that'd be my short area for today, and I'd look for it to rotate back over. There's a lot of sentiment behind this day trade.
All right, one more here real quick, Tony. The Crow is asking about Celsius. The ticker is CELH, Charlie Echo Lima Hotel.
All right. Man, epic run. So let's go to a bigger time frame and try to figure out what this is trying to do.
Okay.
All right. We've broken higher lows on a monthly. That's a big issue. We've come back down. We've worked our way back over. So in my opinion, we are still in the zone where bears should take over. Will they? I don't know. But the probability is probably leaning a little bit more bearish. So if we understand where we're at on the big picture, now you can see the bears did take over in this area. Really nice double top on a weekly. We've retested that, came back down. Here's the issue. Once we retest, we should not come back to that level. Bears should hold and push us lower. So if we go to a daily chart, I bet you we're going to look at the levels that the bears broke right here. This should be the spot that the bears should not get it up above. When we gap up massive, now we're starting to see a lot of bears getting squeezed, right? So this needs to continue. If we can get the bulls to buy it back up, this is a really strong bull area. This is going to be an important battleground around 52 to 48. What happens here is going to determine what's going to be moving over the next few months. If the bulls can step in here, we should fight back up to 60. And if the bulls are strong, they need to get a close above 60. If the bears are strong, they're going to reject here, and it's going to start trapping bulls again here, because overall in the bigger picture, the sentiment is a little bit more bearish based on the structure that's been broken. So it's all over the place. I have no idea which way it's going to go. I would just have a game plan to watch certain areas, and this area right here is going to tell me what's, where it's most likely going to go over the next few months.
Awesome, Tony. Always appreciate your wonderful chart analysis. Even more so, at least for me, your lovely sentiment, keeping it optimistic. Lots of words of wisdom, Tony. We always appreciate you jumping on. Coach and owner over at Real Life Trading.
Thanks for having me, guys. Thanks for letting me rant for a little bit. Made my Friday.
All right. Have a good weekend, brother.
See you guys.
All right. Later. Triple D. Are you coming back to the stage, Triple D, or you want to stay backstage?
No, yeah, let's do some ratings.
Cool. I think you want to start with Duolingo.
I think so. I think we go into the Duolingo. Just give us the earnings report, because we reported there last night, and the stock is obviously trading down some here this morning.
Do you have them in front of you, Triple D? My computer was just down over here for a sec.
I'll get them up here for
I'm
you.
getting
So
logged in.
Duolingo did report earnings here last night. Now it's $400 million buyback, but the numbers were light. Sales guidance was light too. So we're looking, 288 versus 290 million for the quarter. Fiscal year, a little bit light. 1.197 to 1.22 versus 1.26. So sales guidance light. Nothing crazy here, but we know that the market is very concerned about this. This is like Duolingo is ripe for disruption. And, this has been something that has, been being disrupted here for the better part of a year now. So $500 9 months ago, stock is $86. Is this a long-term buying opportunity for Duolingo? I'm not going to say that AI isn't going to disrupt this. I think it's ripe for disruption, so I'm just staying away. Analysts, though. So Evercore.
Let's hear your
downgrades.
ratings.
Evercore downgrades. Morgan Stanley downgrades. They had so Evercore downgrades to inline. They were at buy. Morgan Stanley downgrades to equal weight. They were at buy. Scotiabank downgrades sector perform. They were at buy. China Merchants downgrades to hold. They were at buy. JP Morgan downgrades neutral. They were at buy. KeyBank downgrades to sector weight. They were at buy. Citigroup downgrades neutral. They were at buy.
Oh no!
So the stock was $500 a share back 9 months ago. It has fallen 80%, and now you're telling us, well, just hold. These are Fs across the board. Fs for these ratings across the board. Sorry, analysts, all chasing. Nobody's seeing the forest through the trees. Nobody's seeing that AI was going to disrupt this 6 months ago. Terrible calls by all of these analysts. That's where I'm at on TU.
I couldn't disagree at all.
You concur.
I concur, doctor.
I mean, and then if you want to do another one,
why not?
Yeah, we can go into let's go into some upgrades here. There's a few this morning. Analysts have been very quiet. And why are they quiet? Because they don't know where this market is going, and they don't want to be held out. So you're just not seeing a lot of analyst moves here. You've got a few here this morning. Now, Morgan Stanley, another chase. Morgan Stanley's a chase is on today. They're upgrading XYZ to overweight today. Holy Morgan Stanley. You're selling Duolingos, you're selling dips, and you're buying rips. You guys don't listen to pre-market prep over there, do you, at Morgan Stanley? So another rating that I would not be a fan of here. Yes, efficiencies are there, but this brings us to a whole part of the conversation here. It's a nice 16% pop, but has come off the highs here already. It's still Block. This company wasn't
same
killing
company.
it.
Yeah.
It's not like this is like the awesomest company ever here. It's still been in the gutter. It's still payments, which the whole industry is being disrupted. So, I mean, was the cuts here by Jack? He says how great the business is still doing, but was that just, like more cuts? Like, we want to get more efficient because our business, maybe it's doing great right now, but maybe, it could get disrupted here too. So I would not buy the XYZ rip here this morning. I completely disagree with Morgan Stanley, who's upgrading the stock and telling you to buy it this morning. I completely disagree with that. So you're chasing at this point in time. I wouldn't be surprised if some of it gives it back. I do think the efficiency pop makes sense, but I think I would be using this opportunity to get out of a bad stock.
Why not just read a little here from what Morgan Stanley had to say? Maybe they can defend themselves in some of this commentary. The firm sees faster growth and an expected total addressable market for Block after its recent product enhancements, job cuts not mentioned yet. In addition, the company's opportunity in AI should increase its profitability. Morgan Stanley believes Block has been rapidly expanding its total addressable market through product improvements. So, considering what we just read there, they didn't mention the job cuts at all. So it probably was that Morgan Stanley largely had this rating change set before, it's crazy to say, their earnings report. Or else I would have think they would have mentioned the job cuts. Just something to think about there. That was a little peek inside of the Fly and their the Pro platform. Any other ratings you want to do here to Triple D, or you want to do
let's just finish up. So XYZ is the talk of the town. I want to give you some perspective here, though. IGV was trying to put in a short-term bottom here this week. It was a good 3 days. Now you get the check back. I do think there's a potential for some of these software dips to get bought here today. I don't think it's the end of the world here. I think that there's a lot of things to think about long-term. I still like my TLT trade long-term. I think it's breaking out. I think the technicals are there. I think if you're a trader here, though, and you're short IGV, I think it might be a trade to bring some of it in here today. Because I think that low from 3 days ago, for now, is safe, 76.25. I don't think we're going straight back down there. I think there's a few people who think that these software names, and let's be honest, it's XYZ. This is like the XYZ sell-off. It's kind of a little bit overdone here. So I actually would be a buyer of some of these software names today. As trades.
Sure,
not
sure.
investments.
All right, folks, we're going to wrap it up here on pre-market prep for this week. A good little week here on pre-market prep. We're going to, Triple D and I are going to kick it over to STN for a few, stocktradernetwork.com. Money Mitch is going to be joining us here in like 10 or 15 minutes and get us ready for the open. Folks, everyone have a wonderful weekend. We'll see you next week.